If you think the leap from the abacus to the iPhone was significant, you are not prepared for what is coming next. We are standing at the edge of the quantum era. For years, quantum computing was a science, project a theory discussed in university basements. But if you look at the financial documents of IonQ, specifically from their SPAC merger in 2021 through the third quarter of 2025, the narrative has shifted. It is no longer about if quantum computing works. It is about how fast they can build the factories to produce them. Today, we are going to deconstruct IonQ. We are not just looking at stock prices. We are looking at the architectural shift in computing power that this company is leading. We will analyze how they moved from a theoretical lab to a company, generating tens of millions in revenue, and why their 2025 financials suggest they are leaving their competitors in the dust. To understand the magnitude of IonQ's potential, we have to go back to the 2021 and 2022 annual reports. Back then, the company was defining the rules of the game. They introduced Algorithmic Qubits, or AQ, because simply counting qubits was misleading. They told us that NER AQ29 would be the turning point. Critics said it was hype, but by 2023 and 2024, they hit every single technical milestone early. The 2024 annual report isn't just a collection of numbers. It's a victory lap of engineering execution. They achieved AQ35 a year ahead of schedule. Why does NER AQ35 matter? Because at that level, the computer becomes impossible to simulate with classical hardware. They crossed the Rubicon. Now let's fast forward to the most critical data, the 2025 quarterly reports. The Q1, Q2, and Q3 filings for 2025 tell a story of rapid commercialization. In the third quarter of 2025, we see revenue accelerating. This isn't just government grant money anymore. This is commercial revenue from enterprise customers who are buying access to these systems to solve problems that supercomputers cannot touch. The bookings number, the total value of contracts signed, is the leading indicator here. In 2025, bookings have surged, indicating that major corporations are securing their place in the quantum line. They know that when the IonQ64 systems come online, the advantage will be so massive that being second will mean losing the market. We must discuss the technology moat trapped ions. While competitors like Google and IBM are betting on superconducting qubits, which require massive dilution refrigerators and have high error rates, IonQ uses individual atoms suspended in a vacuum. The 2025 documents highlight the stability and manufacturing scalability of this approach. They aren't just building computers. They are building a networked quantum architecture. The Q3 2025 report hints at the progress in photonic, interconnects the ability to connect multiple quantum chips together to scale power exponentially. This is the holy grail of scaling, and IonQ is leading the charge. Let's look at the balance sheet. In a high-interest rate environment, cash is king. Throughout 2024 and 2025, IonQ has maintained a fortress balance sheet, with hundreds of millions of dollars in cash and cash equivalents. Unlike many speculative tech companies that are bleeding dry, IonQ has the runway to execute its roadmap for years, without needing to dilute shareholders desperately. They are spending heavily on R&D, yes, but it is disciplined spending focused on the Seattle manufacturing facility. This factory is the first of its kind, a dedicated assembly line for quantum data centers. But what is the risk? The 10K filings list many. The technology is hard. The supply chain is complex. However, the biggest risk for an investor today might be missing. The ChatGPT moment of quantum. Just as AI exploded into the mainstream overnight after years of development, quantum is poised for a similar breakout. The 2025 financials show we are in the installation phase. The hardware is being deployed. The software partners are building applications. So, what is the verdict for the long-term investor looking at 2026 and beyond? IonQ is transitioning from a technology risk story to an execution risk story. The physics works. The challenge now is building enough machines to meet demand. With a target of NER AQ64 in the near future, we are looking at a machine that is millions of times more powerful than today's versions. For the patient investor, IonQ represents a call option on the future of human intelligence and problem solving. We are not just buying a stock, we are buying a piece of the infrastructure that will cure diseases, fix supply chains, and revolutionize finance. In conclusion, the journey from 2021 to late 2025 has been about proving the skeptics wrong. IonQ has delivered on every promise. The financial data from 2025 confirms that the commercial flywheel is spinning. Revenue is real, the backlog is growing, and the technology is scaling. As we look toward the latter half of the decade, IonQ stands alone as the pure-play leader in the most disruptive technology since the internet.